Hi friends, today I'm going to explain about income and expenditure account which we prepare in non-trading concern lesson. See, the final accounts of non-trading concern or not for profit organization contains three components: receipts and payments account, income and expenditure account, balance sheet. Now, regarding NTC meaning, some basic concepts like capital expenses, revenue expenses, capital income, revenue income, and about some basic terminology as subscriptions, legacy, life membership fee, etc. I made other videos. Regarding receipts and payments account also, I made one video. So first you watch those videos, then only you will understand this present video. Now, to prepare income and expenditure account and balance sheet, we need receipts and payments account. Therefore, in question, receipts and payments account will be given to us along with some adjustments. By taking these two, we should prepare income and expenditure account. Before preparing this account, you should know some basic differences between receipts and payments account and income and expenditure account. Receipts and payments account is a real account. Therefore, as per real account rule, debit what comes in, credit what goes out, we follow here. In one current year, if cash is coming, it becomes a receipt and it will be debited to this account. And if cash is going, it is a payment, it should be credited to this account. It is a real account. And when you come to income and expenditure account, it is a nominal account. So nominal account rule you should follow while preparing this account. What is nominal account rule? Debit all expenses, losses, credit all incomes and gains. Debit side expenses we should write, credit side incomes. Now, debit side we wrote receipts here, no? Receipts become income. Means debit side amounts of receipts and payments account we should write in credit side of income and expenditure account. Similarly, payments become expenses. So credit side amounts in receipts and payments account, they come in debit side of income and expenditure account. Remember this point. Debit becomes credit and credit items we should write in debit. Next, receipts and payments account. We start with opening cash balance and opening bank balance. We end this account with closing cash balance and closing bank balance. But these cash and bank balances, they do not contain in income and expenditure account. But cash in hand and cash at bank, opening balances and closing balances, they do not appear in income and expenditure account. Next, in receipt side, we record capital incomes and revenue incomes both. In my previous video, I explained what is meant by capital receipt and what is meant by revenue receipt. Capital receipt is a non-recurring income. Means rarely that income comes to us. But revenue receipt is a recurring income. Again and again we receive that. Now, receipts and payments account contains capital receipts, revenue receipts, both. But while taking debit items in credit side of this account, ignore all capital incomes and take only revenue incomes. Similarly, payment side of receipts and payments account, we record capital expenses and revenue expenses both. What is meant by capital expenditure? A non-recurring expenditure. If any expenditure is incurred rarely, any expenditure which gives a long-term benefit, any expenditure which is incurred to acquire some fixed property, that expenditure is called capital expenditure. And payment side, we record revenue expenses also. What is revenue expenditure? A recurring expenditure is known as revenue expenditure. For example, salaries. Every month we pay. So it is a revenue expenditure. Revenue expenditure gives short-term benefit to the firm. Here short-term means within 1 year. Now, receipts and payments account contains capital expenses and revenue expenses both. But while writing in income and expenditure account debit side, ignore all capital expenses, record only revenue expenses. So what is the difference here? Receipts and payments account contains capital and revenue items both. But income and expenditure account contains only revenue items. Since only revenue items we record here, income and expenditure account is also known as revenue account. The next difference is, in receipts and payments account, we record current year receipts, previous year receipts, next year receipts. For payments also same point is applicable. Current year payments we record, last year payments, next year payments, all. But while preparing income and expenditure account, only current year incomes, current year expenses we should take. If previous year income or next year income are included in this current year income, we should exclude them. We should deduct them. Similarly, previous year expenses, next year expenses also, we should deduct from current year expenses. So what is the second difference? Receipts and payments account contains current year amounts, previous year amounts and next year amounts. But income and expenditure account contains only current year amounts. Why? Because we want to know current year surplus or deficit. What is meant by surplus and deficit? I will explain later. To know current year result, only current year incomes and expenses we should consider, not the previous one and next year. That is why we should deduct them. Clear? Next. Receipts and payments account is prepared on cash basis method. Cash basis means what? Whenever cash is coming, we record that in debit side. Whenever cash is going, we record that in credit side. But in case of income and expenditure account, we follow accrual basis of accountancy. It is also known as mercantile basis. What it is? Not only paid expenditure, outstanding expenditure also we consider. Paid and payable, both we should record. Similarly, received income, accrued income. Accrued income means what? Income to be received. So received income, receivable income. both we should consider in income and expenditure account. So what is the difference here? Receipts and payments account is prepared under cash basis method, and income and expenditure account is prepared under accrual basis method. Clear? Now let us start the problem. First, receipt side, debit side, we take this part. So this receipts and payments account debit side, in income and expenditure account we said we should write them credit side. But while writing, what we should do? Receipt side, he gave capital receipts, revenue receipts both. Ignore all capital items, take only revenue items. And while taking those revenue incomes, consider these adjustments also. First one, cash in hand, cash at bank. These two are known as opening balances. Opening balances do not come in income and expenditure account. Therefore, ignore. Next item is subscriptions. Subscriptions means what? In our non-trading concern, when a member wants to continue his membership, then every year he has to pay subscription amount to us. It is an income and it is a revenue income. Why? Because again and again it is coming. Therefore, it should be taken in credit side by subscriptions. While writing the amount, once you have to verify any adjustment is given in the question. If there is any adjustment, then write down the amount in inner column. If there is no adjustment, directly you can write in outer column. Yeah, adjustments are there. Therefore, subscription amount 4,000 in inner column. Then adjustment number 1. Outstanding subscriptions 1,000 rupees. What is the meaning of that? Total subscription for current year is 1,000 plus 4,000, 5,000. In that 4,000 we received it and more 1,000 should come. Since income and expenditure account is prepared on accrual basis, not only the received income to be received, nothing but accrual income also we should consider. Therefore, add this 1,000 rupees plus outstanding 1,000 rupees. One more adjustment is given. Third point, subscriptions received in advance 2,000 rupees. What is the meaning of this? That income in next year we should receive, but we got that in current year only. Even that income also included in this 4,000 rupees. We want to know current year surplus or deficit. For that, only current year incomes, current year expenses we should consider. Other year income is included in current year. What we should do? We should deduct that. Therefore, minus next year subscriptions. Amount is 2,000 rupees. Then, in outer column, current year subscription amount is 3,000 rupees. Then, next item is donations. Donations received for mineral water. Donation means what? If anybody gives some gift to us in cash form, it is called donation. Since ours is a social welfare organization, some people donate money to us. This donation is divided into two types: general donation, specific donation. General donation means what? That money we can use for any purpose. Specific donation means money will be given for a specific purpose. We should use that only for that purpose. Observe here, donations received for mineral water. Means that money we should use only to provide mineral water to our members. Means it is a specific donation. Irrespective of the amount, that specific donation is to be capitalist. Means treat specific donation as capital income. Therefore, ignore. Don't record that in income and expenditure account. Where it goes? In balance sheet, liability side. Then, next one is sale of furniture. Do we sell regularly? No. Furniture is a fixed asset. When it is totally damaged, on scrap basis, we sell that asset. So, since it is rare income, it is capital receipt, ignore. But regarding furniture, there is one adjustment. Adjustment number 2. Value of a furniture sold 4,000 rupees. Means when we are selling on that day, the book value of furniture is 4,000 rupees. Book value means what? From cost of the furniture, when we deduct total depreciation, then the remaining value is known as book value or written down value. Now that book value and sale value we should compare. Book value is 4,000. Furniture value was 4,000 on the date of sale. And it is sold for how much? 3,000 rupees. Since it is sold for less rate, we got loss here. Losses are to be debited in this account. How much is the loss? 1,000 rupees to sale of furniture. How this 1,000 rupee came? Furniture value is 4,000 rupees. We sold it for 3,000. Clear? If there is any profit in this sale, we said it should come credit side. Then next one, interest on investments. Investment means what? We have some savings money. We invested that amount in outside business. Say we purchased company shares or debentures or government bonds. That is called investment. When we invest our money somewhere, we get dividend or interest on that. And every year it comes, means it is a revenue receipt. We should take here. And regarding this interest on investment, there is one hidden adjustment. What is meant by hidden adjustment? It will be not given directly. We should understand that there is one adjustment here. See the credit side. 10% investments, 55,000 rupees. In payment side, he is giving investments. What is the meaning of that? In current year, we invested in outside business. We paid money. Since cash is going, it is appearing in credit side. How much worth investments we bought? 55,000 rupees. Investment is an asset. It comes in balance sheet asset side. And what is the meaning of this percentage? That indicates the interest rate. So in rough notes, once you should verify how much is the interest on that investments. Investments value is 55,000. On that 10% interest we should receive. So how much will be the amount? 5,500 rupees. Should come. But observe in debit, how much interest we got? Only 5,000 rupees. Therefore, more 500 rupees is to be received. How he has to give this? In adjustments, clearly he should indicate. Interest on investments accrued 500 rupees. Instead of giving like that, he is giving in indirect way. Now, interest on investment, since it is revenue income, it will be credited to this account. So, interest on investments. First, how much money we received? 5,000 rupees. Take that in inner column. Then more, how much money should come? 500 rupees. That 500 belongs to current year only, no? Since accrual system we are following, not only the received amount, receivable also we should consider. Add to be received. How that 500 came? 55,000 is the value of investment. On that 10% should come. It is 5,500. In 5,500, already we received 5,000 rupees. Then more, how much money should come? 500. If you add both, 5,500 is the total interest amount. In that 5,000 we received, 500 we should receive. Put in brackets. Then next one, entrance fees. So entrance fees means if any member is joining in our organization, then he has to pay some initial amount. It is known as entrance fees or admission fees. What is the accounting treatment for this? If he gives any instructions, we should follow that. If he is silent regarding entrance fees, then treat it as revenue income. Let us see the adjustments. Yes. So nothing is given regarding entrance fees. Then what we should do? Treat it as revenue income and write down in the credit side. Entrance fee. Amount is 1,000 rupees. Then next one, donations. See, donations are of two types, no? General donation, specific donation. Observe here, donations received for mineral water. Since it is received for a particular purpose, we assumed it as specific donation. But is he giving like that here? No. Only donations. Means what? This 6,000 rupees we can use for any purpose. So it is called general donation. Regarding general donation, what is the accounting treatment? If he gives any instruction, we should follow that. If he is silent regarding that, then treat it as revenue income. So let us see the instructions. Nothing is given. Therefore, donation is to be taken in the credit side. Next, legacy. Legacy means what? Through a will of a deceased person, if he receives some amount, that is called legacy. In the absence of any information, legacy is to be treated as capital income because rarely it comes. But if he gives any instruction, we should follow that. So, observe here. Yes, he is giving one instruction. Capitalize half of the legacy. Means what? In total legacy amount 2,000 rupees, half amount, that is 1,000 rupee, is to be taken as capital income and another 1,000 rupee is to be treated as revenue income. Then that revenue income appears here. Which side? Credit side. By So credit side, buy legacies in brackets, total amount is 2000 rupees, in that half. Another half where it goes? Balance sheet liability side. Then next item is life membership fees. If any member wants to continue the membership for lifelong, if he doesn't want to pay subscriptions every year, if he wants to pay total subscription money as a lump sum, then that amount is called life membership fee. It is always capital income. But if he gives any instruction, we should follow that. Let us see the instruction. No, nothing is given. So life membership fee is a capital income. Therefore, ignore here. Where it appears, balance sheet liability side. The next one is sports fund. Fund means what? Some savings amount. Since it is non-trading concern, they conduct some sports. To meet that sports expenditure, they saved some amount. How much money they saved? 5,000 rupees. Fund, always it comes in liability side, so ignore here. And regarding fund, there is one credit item also, sports expenditure. Whenever sports expenditure and sports fund both are given, ignore both while preparing income and expenditure account. Because what we do here, in balance sheet liability side, from sports fund, sports expenses we have to deduct. Therefore, ignore both. Assume that sports fund is not given, only sports expenses are given. Since the fund is not there, sports expenditure is a revenue expenditure and it should be debited to income and expenditure account. Then, next one, sundries. Sundries means what? Various small incomes or expenses. Which side is giving this amount? Receipt side, means it is an income to us. It is to be treated as revenue income. Record here only, sundries amount is 2000 rupees. Next, sale of old newspapers. Regularly we sell like that. It is a recurring income. Therefore, you should credit this. Sale of newspapers, 1000 rupees. Then next, sale of grass. When they maintain any ground, then regularly they have to cut the grass and they should sell them. It is a regular income. Therefore, revenue income. Write down here. Next, loan from bank. Do we take loan repeatedly? No. It is only for one time, capital income, so ignore here. Where it appears, balance sheet liability side. Then next one, dinner receipts. Yeah, regularly we conduct this program income, therefore credit here. 3000 rupees. Municipal grant. Since ours is a social welfare organization, sometimes government gives some grants to us. It is a rare income, therefore ignore it. Next, come to payment side. Payment side he gives capital expenses and revenue expenses both. Which expenses we should take here? Only revenue expenditure. That too which side? debit side by considering these adjustments. First point is salaries. Every month we pay salary, means it is a recurring expenditure. So it is revenue expenditure. It should be debited to this account. To salaries. If there is any adjustment, take the amount in inner column. See, this is over, subscriptions over sports material. Yes, there is no adjustment regarding this. Therefore, salary is 2000 directly in outer column. Next, furniture. Whenever any fixed asset name is given in the payment side, then the meaning is in current year we purchased it and we paid money for that. Do we purchase furniture regularly? No. It is capital expenditure, ignore. And observe, is there any adjustment regarding this? No. See, this adjustment belongs to sold furniture. Clear? While writing this value, you need not to consider this. Then next one is 10% investments. It is already completed. Then general expenses. General expenditure is a revenue expenditure. Regularly we spend some administration expenditure. Therefore, write down in debit side. Next, books. Remember some points. If we buy newspapers, magazines, treat it as revenue expenditure and debit it, because regularly we buy like that. But purchase of books is to be treated as capital expenditure, because books means what? For example, you are running one educational institution and you are maintaining a library. Then once if you buy any book, at least for 10 years, we keep that book there, we use it. So books come under fixed asset only. So since it is a rare expenditure, capitalize it. Don't record here. But regarding these books, if there is any depreciation, that depreciation is to be debited here. See, fifth point. Books are to be depreciated at 10% per annum. Depreciation is there. So we said we should write that debit side, because it is a nominal account. Nominal account rule I am following. Debit all expenses, losses, credit all incomes and gains. Depreciation is a loss. It is to be debited here. Remember one more difference between receipts and payments and income and expenditure. In receipts and payments account, only cash items we take. Cash receipts, cash payments. But in income and expenditure account, cash items and non-cash items also we take. Depreciation. Cash is not coming, not going. When fixed asset value is there, that value is decreased. It is a non-cash item. That also we should take here. Clear? Then, to depreciation on books. Books value is 5,000 rupees. And percentage 10%. Then, observe this date. If any date is given like this, then the meaning is it is the purchase date. When we bought these books on 1st October 2016. Once you observe the current accounting period, 31st March 17. What is the starting date of this year? 1st April 16. During this current year, on 1st October 16 we bought these books. Means we didn't use the books for a complete year. From 1st October to 31st March only we used them. Means October, November, December, and here 3 months. Total 6 months we use these books. In depreciation lesson, you learn this point. For how long we use that asset, only for that many months we should provide the depreciation. Therefore, into 6 by 12. 6 months. From when to when? From 1st October 2016 to 31st March 2017. That period I am taking here. Then ₹250 is the depreciation. Next, newspapers. Newspapers regularly we buy. So it is a revenue expenditure. It is to be debited. The next, sports expenses I told. Since there is sports fund, ignore it. If sports fund is not there, take that amount in debit side. Same rule is applicable for tournament expenses and tournament fund. Prize expenses and prize fund. Clear? The next one, land. Fixed asset. Rarely we buy. It is a capital expenditure. Ignore here. Where it comes, balance sheet asset side. Next, sports material. When sports material is given in the payment side, what is the meaning of that? We purchased it during the year. Sports material, do we buy regularly? No. It is also one-time investment. If you run any sports club, if you buy any sports equipment, we use them at least for 5 years, 7 years. Since it gives long-term benefit to us, it is to be capitalized. And regarding this sports material, see the adjustment number 6. Sports material opening balance 4,000 rupees, closing balance 5,000 rupees. What is the meaning of that? See, opening date 1/4/16. On that day, how much were the sports material we have in the firm? 4,000 rupees. This one. During the year, we purchased more 2,000 worth material. Add it plus 2,000 rupees. At the end, how much worth material we should have? 6,000. But how much is the closing balance? 5,000 only. What happened here? 1,000 value is decreased. If any fixed asset value decreases like that, it is called depreciation. Therefore, depreciation is given indirectly. So remember this point. Regarding any fixed asset, if additional purchase is given in the receipts and payment account and opening and closing balances are given in the adjustments, then what is the meaning of that? Indirectly, he is giving depreciation there. Depreciation, where we should record? Debit side, because it is a nominal account. 2. Depreciation on sports material. Once you observe the depreciation on books, how we calculated there? Since percentage is given, like depreciation chapter we calculated here. But for sports material, he is not giving percentage. Then what we should do? Take opening balance 4,000, add purchases 2,000, deduct closing balance, then remaining amount in outer column. Clear? Sometimes he may not give opening balance. No problem. In that case, what to do? Only purchases you should take. From purchases, closing balance you have to deduct. Then the remaining amount is depreciation. Then magazines. Regularly we buy. Means revenue expenditure. It is to be debited. Magazine's amount is 1000 rupees. Next, charity. Since ours is social welfare organization, we undertake so many charity activities. We help others. It is a regular expenditure, therefore debit here. Next, dinner hall. We constructed dinner hall. It comes under fixed asset, no? Ignore it because it is capital expenditure. Fixed deposit. We deposited our money in the bank. We opened one FD there. So cash is going, therefore he is giving in payment side, and regularly, daily, we are not going to open any FDs like that. So it is rare expenditure, capital expenditure, so ignore. Then finally, closing cash balance and bank balance. These two appear in balance sheet asset side. Not here, therefore ignore. Now, all receipts and payments account items we have completed. Let us see in adjustments also. If there is any adjustment which we have not considered, we should take now. No, all adjustments are also over. Now, finally what to do? We should balance this account. Okay, first debit side and credit side. Observe both sides. Which side total is more? From that side total, other side total, we should deduct. Yeah. So, when we total them, credit side total is more than debit side total. Credit side what we wrote? Income. Debit side expenditure. So, income is exceeding the expenditure. Then the difference is not profit. Since it is not for profit organization, we should not use profit or loss words. How you should record this? Surplus. Surplus means what? Excess of income over expenditure. Which side we should record this? Which side total is less. Therefore, debit side record this amount 11,250. What to write for that? Surplus. Then two side total. Okay. Suppose it is trading concern. P&L account we prepared. Finally net profit came. That money belongs to whom? Owner. He can take it. Therefore, we add that net profit to capital in balance sheet. Assume it is partnership business. Then that profit will be distributed among the partners. Means owners take that. If it is a joint stock company, then that profit will be distributed to shareholders in the form of dividend. But this is non-trading concern. This is a charitable organization. Therefore, members do not take this surplus amount. What they do? They add this amount to capital fund in balance sheet. And they keep this surplus amount in the firm only. Why? To meet next year expenses. Clear? Suppose debit total is more than credit total. Then we said we should write that answer credit side. Then what is the meaning of that? Expenditure is more than the income. This is known as deficit. Clear? Credit side, if your answer comes, you have to write by deficit. Deficit is to be deducted from capital fund in balance sheet. So this is about income and expenditure account.